welcome to Doc's Market Minute for Wednesday, April 27th. What I'm looking at here is an intraday and after hours chart of Apple. So yeah, stocks do trade after hours. The session is a lot less liquid, but we do have a lot of movements, and this is where the professionals can get an edge over retail traders by participating in after hours trading, although it's very tricky to do because of the thin markets. So you can see how on Tuesday, we basically had all of this sort of very flat price action here on Apple. Didn't really do much, just slowly drifted lower. And what we saw here was an expected move in the option chain for the options that are expiring this Friday of about a 5-point move, plus minus 5-point move. And so what that was pricing in is a move to perhaps as low as 99 and perhaps as high as 109 up here. So plus minus the expected move. And what this looks like over time is a normal distribution curve. So what we find is that 68.3 of the occurrences are going to fall somewhere within this. And then there's the fat tails where we have the remaining 32% of the occurrences, and there's going to fall outside of this range. And certainly we can see that the stock tried to remain within the expected move. A lot of times those get defended very vigorously at the edges, but eventually the supply got eaten through and we dropped far below that, at least by only 3 points. So right now we're in a fat tail move after Apple earnings that occurred on Tuesday night. So let's zoom out and see what the big picture looks like on Apple. All right, here's the full Apple series. We can see the monthly, weekly, daily charts and a little bit of the 78-minute chart on the right side. We can see that as we look at Apple, Apple was in a serious uptrend, and a lot of times when we have stocks that go this vertical in this short period of time, really it went from 60, a split adjusted 60 from early 2013, and just more than doubled that price by the time we got midway through 2015. That type of vertical slope typically has a bad reaction on the downside. So what we saw was a very quick correction for this, set in a lower high, and so far this is just a higher low. So what we're seeing is more of kind of a huge consolidation that may be staying within this range for quite some time. Now, if it does break that consolidation, this amount of energy that it sort of coiled up can actually release to the downside, which would not necessarily be a good thing. Now, this white block that I have over here is basically showing for this head and shoulders pattern, which set up an Apple at the top, this will be the downside target for that. So we'll see if that still stays in line. Now, as we get on to the weekly chart here, we can see that the weekly chart shows a series of lower highs and almost lower lows. Again, this was I guess, about as close as you can get to an equal low as you can, with another lower high setting up, and as of this morning, the price is going to be down here near 95. So the 90 to 95 price level is being vigorously defended down here, the dip is being bought so far in Apple. But again, if that level releases, and we can see that as of yesterday's candle, we're going to end up down here. We're going to gap down near 96, and you can see how devastating that can be. Now, sometimes these gaps can get closed from the upside, but this is still going to leave this open window up here, which is going to be very difficult with a descending trend line. So Apple's kind of in trouble right now, and there's actually a fundamental reason for it. For the first time since 2003, they did not show any growth. They actually started slipping lower. And, you wonder if the arrival of their new spaceship building typically shows that a company has peaked when they start making a monument to themselves. So how can you trade something like this? Well, I'd like to see if there's any kind of bounce back up which fails at about the $100 level on this. So if we get a little bit of a reversion back to the mean, back up to that expected move area, we could see that fail at that point, and I like selling into strength for this to see if perhaps we can get some kind of credit spread, maybe a bear call spread up here. Or what we could also do, and the implied volatility is still actually not very high at this point. The IV percentile's still fairly low, which is surprising. So we could see an ability to enter a long put spread with a downside target, maybe down here around 90 or so. So if we see this thing punch higher up to that trend line, setting up a downside target down here, either at the money for a little bit more money and an easier trade to manage, or out of the money for a better reward to risk, would be a nice play. That's it for today's Market Minute. Thanks for listening. We'll see you tomorrow.